Hello and welcome back to All Things Money. I'm your host for the show, David Blain. We thank you for joining us today on 94.1 FM WNBU and Cable TV 10 in New Bern. During this segment, we're going to continue our discussion about hopefully some good tips for you of things that you can control. In today's economic, political environment, it's extremely volatile. The financial markets are volatile. The political climate is volatile. You've got elected officials telling other tea parties to go to very hot places, the opposite of heaven. This era of uncivility abounds in the political climate as well as the financial markets. You have extreme volatility. You've got Mideast turmoil. And so what we want to do is give you a few things that you can control and to help reduce some of the anxiety maybe associated with this. So number one was try to get control of your emotions. Have a plan in place, a plan for retirement or a plan for that new car, a plan for your children's college, and simplify your life. Of course, we advocate when we have a client, we gather the assets together and we put them together in a unified plan where they're not dealing with this company over here, that company, and they don't have a good picture of their investments. So simplify and get control and have a plan. Those three things alone bring incredible peace. It's one of the comments we hear from our clients all the time is how much better they feel about their investments. They got a plan and it's simplified and they don't worry as much about it. So a couple other things. Make sure that your investments, I hear this all the time, well, I don't put any money in the stock market. Well, why are you putting money in the stock market that you need to spend next month anyway? That's not the purpose of a long-term investment plan. That money that you invest in the stock market, you're talking about money that you're not going to need for 3, 5, 10 years from now. And even that, you should not put all your money into the stock market. And you should not put it all into the U.S. stock market. And so you hear me talk a lot about diversified portfolios. There's no excuse today for someone to just go out and buy, a U.S.-based stock fund, and that's all the investments they own. There's so much more to investing. There is, large companies, small companies, foreign companies, emerging market companies. That's just the stock market. Then there's the bond market. There's regular bonds. There's treasury bonds, corporate bonds, inflation-protected bonds, foreign bonds, emerging market bonds, U.S. dollar-denominated bonds, foreign-denominated bonds. There's commodities. There's gold. There's all sorts of different types of assets that are available to the individual investor. And frankly, I'm in the business of advising people. We think it's a little complicated for people that don't have a lot of time or the inclination to spend on this. We help construct these well-diversified portfolios for people. But whatever you do, don't just go out there and put all your money in some mutual fund that some salesperson sold to you. It's just a really, really bad idea. You want a diversified portfolio that matches sort of the time frame at which you will need the money. Another thing, you hear this, we're not Dave Ramsey. We generally deal with, people that have some investments and not trying to get out of debt, but I'm just going to throw it out anyway, is to pay off the credit cards, things that you can control. Get rid of the credit cards. Unless you have a 0% loan, don't finance your car for 8%. You've got an 8% car loan and the value of the car is declining every day, every mile that you drive it, and you've got a loan out there. Don't finance your furniture and your TV and things like that. Get that stuff paid off. So you want control over things, get rid of that stuff. Now, I know that a lot of listeners and viewers out there, that's very basic advice, but I just thought I would throw it out there. Sometimes people forget, even the most sophisticated investors sometimes will come in and they'll have some loan or, something. If you want some control, pay that stuff off. Yes, your home equity loan is at 3% and after tax 2 point something. But if it bothers you and the markets are bothering you and you're not making 3% on your investments, there's nothing wrong with paying that off. I'm not saying it's always the best idea, and if you have a longer time frame, may not be a great idea. But these are what I'm trying to do is give you things that you can control. Your expenses. Just knowing what you spend money on. I can't tell you the number of people that come into our office that have no idea how much they spend on food, dining out, entertainment, children's activities, things like that. Those things really add up. Your insurance, your auto, your home, your umbrella, your business insurance, your health insurance. All these type of insurances really add up over time. And just taking a look at these things, that's another thing that we hear people, that we help them simplify their expenses. Do you really need, a home phone, 3 cell phones, a cable bill with every premium movie in there? No, it's very easy to go back to the phone and cable company and cut hundreds of dollars a month off of these bills. And so we encourage people to take a look at that stuff. Get control of your expenses. It's very liberating. In a time like now, you should have control over your expenses. You should know exactly if my investments don't produce as much income, if my business is not growing what I like to, you should know exactly where and what you're going to cut. Not all of a sudden at the end of the month say, oh gosh, my business didn't make enough money this month. What do I do? You should know ahead of time and plan for contingencies, know what you're spending money on, as well as know what sources of income you have. Well, we're coming to the end of this segment. I just kind of want to recap for you. We're trying to give you some ideas of some things to do to make you feel like you have control. Obviously, give us a call. We'll help you do this, but if you don't want to, get your emotions out of it. Have a long-term plan in place. Maintain a well-diversified portfolio. Make sure that you're investing in assets that have the appropriate time frame. Don't be investing your money that you need for a new car next year in the stock market. By the same token, don't be investing your money that you want to live on 30 years from now in a money market fund where you're going behind after inflation. So get your emotions out of it. Have a plan, maintain a well-diversified portfolio, pay off any silly credit card, consumer-type debt, and make sure you know where your money is coming from and what you're spending your money on. Well, that's all the time we have for this week. I hope you've enjoyed the show and that you'll join us again next week.
The proceeding was a paid program. The opinions expressed are not necessarily those of WNBU and Inner Banks Media.